compared to this one and compared to that one. Do you see the big difference? This is like the best one out of the last three, isn't it? This is by miles the best one out the last three there. Yeah. So if you see that, is there any doubt about this being a buy trade? Yes or no? There's no doubt at all, is there? There is no doubt at all. So if there's no doubt at all, I assume you'll have the buy trade, yeah? I assume you all have the buy trade. So obviously that buy trade there was this red candle, and that red candle has resulted in obviously the price driving from 20 to 60s for 400. It's a very good buy trade, isn't it? It's an outstanding buy trade. You know, and as I said, we talked about this buy, we talked about this buy, we talked about this buy, we talked a big time about this sell, which was fantastic. And we talked about every other trade prior to these over the last few days. And it's been 100% winners. 100% winners. So if you don't like 100% winners, of course, I would imagine that you're not going to spend much time on this. But if you like 100% winners so far, I'd imagine you've spent most of the morning putting this chart together and getting it ready for use. If you like your 100% winners, of course. But them's the challenges. Maybe you just like to slog on with the usual. Hope for the best. Keep your eyes closed. Think of Britain. And see if it all comes out good in the end. Obviously, lots of spikes to have to comprehend in terms of a lot of data, gold, the bonds, and things like that. As I said, I'm not involved in any of them, unfortunately. I've not got anything of any real interest on the spike itself. The gold was short going into the spike. You'll be able to pick up from that chart we did a few days ago. The gold had a big value in the short sell prior to the spike. Yields had been rising and been consistently rising, and then even started to rise just before the sell came in at level 2 up here. So yields had started to catch a bid just before that trade. The sell was coming in here, which was good, which gave you the top edge sell, and then obviously from that, if you were lucky enough to still be in it from the 36s, obviously it spiked down to 27.5 for a pretty reasonable $850 sell side profit. And obviously the spike on the retest, very big value to buy back into the reversal if you wanted to. So obviously if you were short, that was a nice opportunity to close off your trade. If you were flat, that might have been a nice opportunity for you to buy some 28s. And if you bought some 28s, you've got all the way back to 36s. It's another $800 on gold, if you like that sort of thing, of course. S&P is obviously being punished hard. There's not an awful lot we can say about it. It's obviously traded off the 70, the price we warned you about this morning in Classroom. We said it would probably, if it holds below 88, it's going to trade down to the 70. And we did a Classroom suggesting that that was the case. In fact, here's the drawing we did this morning. And we talked about this price level, didn't we? We chatted about this as an idea. We said it's going to sell off the 68s. It's going to, sell off the 86s. It's going to sell off the 500s. And of course, it's going to trade down into the next bracket low, which obviously at this time here was at the 70 print, 68 print. And we warned everybody about that because that's where some buying came in yesterday, didn't it? We had some bidders coming back in it yesterday. And obviously we've managed to see, you know, a key strike price, hopefully holding equities in check, because if it goes south or below this level, guys, it's a wide open book. Wide open book to the sell side for about $2,000 a contract. So for everybody's sake, we want to hold this price bid and see if the market can find a little bit of stability to at least launch some sort of reversal back off this same price that we had yesterday. Lose this, and as I said, the gamma becomes perhaps a little bit too slippy for anybody to even try and defend it. And that could be bad news. Yep, they can be absolutely up. You can do whatever you like on it, of course, but we did 1 and 2s because of the because of the fact that you don't have to then keep calendar spread rolls. They're not the best calendars to use, of course, because they don't have the volumes, but for short-term information, they are actually just as good as any calendars, aren't they? But when you start moving up into the half-hour charts, the calendars become slightly more valuable. But what we did in one of them is we just added them together. Gave us an overall composite picture of oil. You know, and obviously if we could get an overall composite picture of oil, it can be a little bit more voluminous because, you know, you might not get volume on BZ2, but you might get volume on the CL2. So you get a little bit more of an accurate composite picture between the two of them.